Now we are here. Oh my god.
Welcome.
All that Swenson's talk.
If you're
Oh,
still tuned in, it means that you ate before the Sauce Talk panel, most likely,
Yeah,
because
seriously.
I imagine most people watching at this point were pretty hungry,
Mm-hmm.
and that would make that panel would make me hungry.
Yeah.
yeah.
They were hungry for food. Maybe now they're hungry for some information.
Now they're hungry for profits.
Yeah.
This has been a really interesting year for me. I've been investing. I've been investing for almost 30 years, but I've been managing this specific portfolio that I run uh, since 2007. And I'm basically a self-taught portfolio manager. Um, and what we've seen this year is this like massive inflow of new investors who have it goes beyond GameStop and AMC here. This is like something during the pandemic happened where people were stuck at home and not making money. You know, a lot of them were unemployed. Some of them had unemployment insurance. Some of them didn't.
Mm-hmm.
They may have had some money kicking around. They put it in a Robinhood account or something, and they started day trading. And what was very much so a tight-knit group of people that were day traders has become democratized, right?
Mm-hmm.
So I wanted to start off talking about that and why I think now is a good time for people to try to educate themselves, because so much of these moves are, for lack of a better word, they're momentum based. People are chasing after other people's due diligence. So in the case of GameStop, when the stock was single digits or below $10, Keith Gill put out that video explaining his long thesis and explaining how he thought that Reddit, Wall Street Bets, should join him in this, and that they could squeeze the stock. Short squeezes existed before 2021, and it's funny to me that people are acting like all this stuff is new, what's going on with Citadel and how they are, the custodians for a lot of the shares held at Robinhood. They don't really have anything. They're not a broker at Robinhood. How people were surprised that a stock could get above 100% short interest. That was the case in 2008 for Citigroup. No one talked about it.
Mm-hmm.
Usually when that is the case, it is a buying opportunity. But yeah, we've seen short squeezes. Short squeezes happen all the time. Tesla, perfect example of a short squeeze. That stock was $5, and now it's $600. And a lot of that capital appreciation was driven by people betting against it. And that's what shorts are, the people who bet against the stock. So it was weird to me to not just hear people saying, oh, I'm buying penny stocks because they're optically cheap or whatever. Sure, that's happened forever. A penny stock appears cheap, right? You can still lose 100% of one penny, right? It's just as easy to lose 100% of a penny stock as it is Apple. Actually, I'd say Apple may even be safer. And that's a mind. I'm gonna curse on this stream because I don't give a fuck. But that's a mind fuck for a lot of people because Apple's like 100. I don't know what is it right now. It's like $132 a share, and there might be some penny stock where I could buy 10,000 shares of that penny stock, or I could only buy X amount of shares of Apple. Apple still might be more valuable. Apple actually pays a dividend. Apple's profitable. Apple actually has sales. A lot of these penny stocks are on the verge of bankruptcy. A lot of them are on the verge of delisting. So that used to be where novice investors would be, in those optically cheap stocks. What's different this time is that the same thing has happened where GameStop was optically cheap. It was $2, $10, $20, $40. And AMC, same thing, single digits, $4, $5, $10. So they appeared cheap, and people were like, "Oh, I can buy this, so I'm going to buy it." And you saw people dumping their stocks to buy these meme stocks, largely without doing any research. Yeah, Blake, you going to say something?
Someone has redeemed the more cursing.
Oh yeah, fuck yeah.
So I think maybe you should, add some fucks, some shits in there.
So these fucking morons started buying the stock without really doing any of their own fucking research because they're fucking idiots.
Right.
And that's what's really crazy about this.
Fucking
is like
crazy.
Fucking crazy. Actually, batshit crazy that you would just go on Reddit and buy a stock because Reddit liked it. And that wasn't always the case with Wall Street Bets. Wall Street Bets existed for a very long time. It was a place to put your dumbest bets. Like really fucking stupid bets, right? Like, hey, I bought these options, they expire tomorrow, I put $20,000 in it, I'm an idiot. That was the average Wall Street Bets post in 2019. And like, I was a part of it. I had been a part of Wall Street Bets for a very long time. Kind of fell off of it. And then when it came back, I was like, oh, like this is like a thing now. And I went and I read Keith's, thank you, Professor Shy Guy, for the raid.
Hey,
we appreciate it, buddy. So yeah, when we saw Reddit kind of fueling this, I started diving deeper into it, and I was like, "What the hell is going on here?" This is not necessarily a news show. This is a show where we're talking about stocks. But hey, thanks, Mad Shroomer, for tuning in. But yeah, if you're we got to follow right there. But yeah, if you were buying these stocks solely because of someone else on Reddit, it just I began to worry, and I'm still worried because I own GameStop. Full disclosure, I own GameStop stock. I bought it in January during all this shit, and I have a couple of options in it too. I'm worried because there was an original message that Keith gave us, and now there's like what it has turned into today. And I feel that those are two different things. One of the core aspects of this that I think people have forgotten is that we, as shareholders of GameStop, can pull our shares out of the market by putting limit orders on them. And that was something at the very early part of this movement everyone was doing. And I think people have completely forgotten that now. When you do that, when you put it on a limit order intraday, your shares can no longer be lent to a short seller. So that decreases the available float for shorts. So at a time when the stock had a short interest over 140%, it was really easy to put a squeeze on that way. Right now, it seems that about 40 to 50% of the float is owned by the diamond hands. And if we actually did what Keith instructed us to do, the squeeze would still be ongoing. That's why I'm worried. People they're not sticking to the thesis. And if you don't stick to your investment thesis, you will fail 100% of the time. Every single time I've screwed up in the market, it's when I threw out my investment thesis. It's when I turned an investment into a trade or a trade into an investment. If it's a trade and you're losing on it, get out. And if it's an investment and you have a thesis, stay long until the thesis plays out. And that's what we're seeing here. And they call them paper hands or whatever, but really what it is people are taking too much damn risk. And people are borrowing money to buy these stocks. Like, that's insane. That's just as insane as the people on the other side of the trade who are borrowing money to short the stock. You know, like using margin in these stocks is super dangerous right now. And that's what we saw in January when the market was collapsing because of GME's rise. You know, you had firms that had to sell their Apple stake and their index stakes and all these things to cover the liability of GameStop on their balance sheet. You have people who are short the stock at $20 and it went to $500. They had way less capital on hand as a result of that. So it's interesting to see that, like, at the core, we did do what the movement was, which was to bring some pain to Wall Street. But I've talked about this with my friends a lot. This reminds me of Occupy Wall Street in the sense that it's a movement that's definitely anti 1%. It's anti Wall Street. it's founded in the same angst that we have about the banksters and what they did in 2008 and 9, or where they got off scot-free. Like, not a single perp walk, trillions of dollars of fraud. Not one of these executives went to jail, right? So that's what was the genesis of the protests in Zuccotti Park. And now I think part of what we're seeing here is similar, and the flaw is similar. When I went to Zuccotti Park in 2010, I saw a fragmented 99%. I saw a gay part of the park, a homeless part of the park, a hippie part of the park, a feminist part of the park. A minority section, or like multiple minority sections, like black part of 99%, Latino part of 99%. And I was like, this is the opposite of what we're trying to do here. Like, yes, we should celebrate our diversity, but if we don't have a unified mission, if we don't have solidarity, we will fail. Because what they're doing is taking out all the weak hands every day. They look at, okay, where are the stop orders? Let's figure out where we can blow these people out. If you're really diamond hands, you're not using a stop loss order. You're long. And that's the problem right now. Like, why is GameStop stock going down right now? Because the people there's weak hands in it. And I think that has a lot to do with fear of missing out. People are running into these stocks after it went from $2 to $485, right? That happened. And then it collapsed down to 40, and then it went back to 350, and then it collapsed down to 130, and then it went back to 350. So it's creating this FOMO, this fear of missing out, right? And that is exacerbating this problem because you're getting the really dumb motherfuckers who are buying the stock above 300 and selling it below 200, and you're doing it wrong. You know what I mean? Like, you're chasing momentum, and then you're fleeing momentum at the worst time. There's definitely Bill saying, is this because everyone wants a piece of GameStop? It's not just the original movement now, it's everyone from everywhere who wants a piece and doesn't get it.
It's like
misinformed people who hear a headline from CNBC and think, oh, I want a piece of that. And it goes back to this, like, people need money, and everyone's like convinced that the stock market is a casino. I'm gonna pull up a long-term chart here.
I know when you got it, and I'll put it live. Just share.
Yeah.
But just
can...
kind of also speaking to what we were talking about, like the other thing that I think is really similar to like the 99% movement is that you have no centralized leadership or anything like that. Like, it's everybody's just like got their own idea and their own concept, and it's cool because you're all kind of in this boat together. But then, people jump off because there's nobody there that can really say hold and get them to stay or anything like that, because for dozens of reasons.
Yeah, I do think that the fact that this is a decentralized movement hurts it. The fact that we don't have, Wall Street Bets threw out the GameStop conversation entirely. They said no more GME mega thread. That hurt. And then you had the birth of r/Superstonk and r/GME. Literally a subreddit was born just for GME, which is kind of crazy. But they fragmented the movement right there. And also they silenced, I don't know who did it, but somebody silenced Keith Gill for almost 2 months. Keith was not allowed to tweet. He didn't tweet at all. I think he was under investigation or something. But Keith did nothing wrong. All Keith did was share his investment thesis, which I did. You can go back and find my investment thesis on Nintendo in late 2016, early 2017. There's nothing wrong with giving people your investment advice, saying this is why I'm long something. And that's all Keith did. But everyone on Wall Street wants to sit there and think, well, something has to be done about this. You can't get away with this. Yeah, and the SEC is attacking the wrong people. There is some good that may come out of this, in that Robinhood will get regulated. And I do think Robinhood has a lot is to blame for this. One of the free, when you sign up for Robinhood, they give you a free stock. One of the free stocks they used to give people? GameStop.
Really?
Yeah. Because it was like $2,
Yeah.
$5, no big deal. Here, have a GameStop share.
Yeah.
So right there, it kind of got people in there. But I pulled up a chart because I want to talk about something a little bit more broader than just this short squeeze, or the mother of all short squeeze that everyone's talking about. Yeah, you got GoPro for 1 year. GoPro was also a low price stock. What we're looking at here is the S&P 500 from 1962 to present day. And this area right, can you see my mouse cursor on screen?
No. I think you have to.
I think when I click, you can.
Oh.
I think when I
can
click,
see the little
can.
there's a little
Crosshair.
crosshair. Yeah.
Yeah. So I'm going to click on this. This right here is the peak of the tech bubble. 2000, March of 2000, we saw a massive sell-off, right? The S&P dropped by almost 40%. And then again, this is the 2007-2008 bubble, right? The financial crisis. Look how big the rally has been off of the lows of the financial crisis.
Yeah.
The S&P 500 was at 666.79 cents in March of 2009. It currently sits at 4,221.88. Now, you might be wondering, like, why am I pointing this out? I think it's super troubling that people who you weren't in this market. You weren't in it in 09, you weren't in it in 10, you weren't in it in 11, you weren't in it in 12. You haven't been in it for over 10 years of a bull market. You have not been in it. And now you got confident? Now? This is the time to be confident? Now?
It does.
The time to be confident was when it was at 666 and no one wanted to buy anything. And Apple was like $20. That was the time to be confident. That was the time to have some balls. Not now. And like the bullshit people are buying, like BlackBerry, fucking Bed Bath and Beyond, Rocket Mortgage, just turds. Some stocks should be shorted because they're shit. It's like high short interest is not always a bad thing. It means that, hey, there might be something wrong with this company. And boy, howdy, was there something wrong with GameStop in 2019. Oh boy, lots of issues with GameStop. Guess what? They haven't fixed much of that shit either. There's still a ton of problems at GameStop. So I understand why there's a short interest there, right? I always look at the other side of the trade. If I'm long something and I buy something, I'm asking myself, why did that person sell it to me, right? Or if I'm shorting something, I'm saying, why is that person long? Why is that person so quick to buy it from? And I think that's a question people need to be mindful of, is think about the other side of the trade. And I can tell you, with an S&P that's up that much, you're buying closer to the high. You just are. Unless this is the one time in history stocks never go down. And if that's the case, because look at that chart. If you look at that chart and you think that there isn't pain ahead, you're out of your damn mind.
Yeah.
And look, that's 500 companies. That's 500 of the largest companies in the world, multinationals. Every company you can think of is in there, except for GameStop. Apple, Amazon, AMD, Bank of America, the financials, the energy companies, they're all in the S&P 500. That's why I picked this specific one, right? This is the benchmark that all hedge funds manage based on. So like a hedge fund, right? Here's what makes this different. Hedge funds are judged every month, every quarter, every year based on performance against that index. So they're getting their ass kicked. If you're short GameStop, you are underperforming the index right now. And you're trying to figure out your way around it. And I think that that's the difference between the diamond hands. That's what they need to remember. We're not accountable to anyone but ourselves, right? Wall Street is accountable to their stakeholders, the people who give them money, the banks that they work with, all sorts of things. And the longer, what I think is good about this situation, I'm going to pull up the GameStop chart now.
That's insane.
That's an insane short squeeze. I'll put it up on a different time frame. This should not be happening. If this was like the Volkswagen short squeeze of 10 years ago or the Tesla short squeeze, this would not be happening.
Mhm.
This is bizarre. I can tell you, as someone who's tried to trade this stock, it's damn near impossible. This should not have happened. What happened in January, we know why. Citadel limited trading, all the brokerages agreed. That's why the stock tanked.
Mhm.
But why did it rally again? Because people were still short. These people, these shorts, the nerve of these shorts to not cover when it got back down to 40.
Mhm.
Look at them. So they got what they deserved. The stock squeezed back up above 350. And then it sold off again down to 132. And then it rallied again to 350. But like, is GameStop really worth $22 billion?
No.
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 So why is this still happening? And it's because and your answer was so quick, right? It's not worth 22 billion. But it's trading for that. And obviously there's shareholders who are comfortable holding it at this valuation. But then again, I think the average shareholder doesn't know shit about valuations. They probably don't even know what a market cap is. They don't know what a float is. They don't know what a short interest is. So they're just holding it because they like the stock, right? This is why I'm troubled, is that there's so many people who are very confident in this market, right? In this market, at this time, right? At this time in history, where the S&P is at all-time highs, highest it's ever been in all of our lives. The fact that they're getting everyone nice and comfortable, that's a bad sign.
Mhm.
That's all I can say to you, is that this is usually, and this is just Wall Street talk. On Wall Street, when retail investors pile into stocks, it tends to be the end of a bull run. Because by the time, because no one in their right mind was buying in 09, right?
Mhm.
I was.
Mhm.
No one else wanted to buy a stock in 09. You had to be out of your mind. I was buying bank stocks then.
Yeah.
I was like, bank stocks are cheap. I'm going to buy them. I'm a fundamental investor. I buy things based on valuation. GameStop I bought because it's a short squeeze. It had very little to do with valuation. It had to do with technicals and the short squeeze. So for me, my thesis, if the short interest drops below 5% or 10%, I'm out.
Mhm.
It hasn't done that yet because the valuation's so high, it's driving the shorts insane. They're like, I'm going to short more because Wall Street doesn't know any better. You know, they're just like, well, I'm just going to raise my basis and then eventually I'll get it. It's, there's a saying, the market can stay irrational longer than you can stay solvent. And I think GameStop is a perfect example of that because this should have ended in February. This stock should be $20 right now, but it's not. And that's why I'm like, it's not over. It's just not over. That's my conclusion, is that until the short interest is gone, like effectively nothing, this will continue. Because it's like, on the one side, you have people who don't know anything, and on the other side, you have people who know too much and are like losing their minds over this disconnect from reality. GameStop is a perfect disconnect from reality. Their stock means nothing, and the performance of the company means nothing to the stock. It essentially trades like a cryptocurrency, you know, most days. And then 4 days out of the year, fundamentals come up when they announced earnings, you know, and they announced their new CEO. But look what happened last week. Every time the company talks to us, the stock goes down. Because we're like, oh shit, that's right, it's a company. And it's a horrible company.
Yeah.
It's like a terrible customer experience. It's like a bad company.
Mm-hmm.
But the memes. And that, let's get to the memes.
So yeah,
Memes are driving this. Yeah.
Yeah, that's something I'm kind of curious about, like the mimetic aspect of this. Like, does this happen with any other stock, or is this can this only happen with GameStop?
I mean, it's happened with other stocks. It's happening with AMC. It's happening with GameStop. And I'm 100% certain if Radio Shack was still around for this, it would be in this basket. People would be buying Radio Shack up. BlackBerry, Nokia, and I don't own these stocks. I'm not recommending them, but these are just stocks that were lumped in to that meme stock basket. It was Bed Bath & Beyond, Nokia, BlackBerry, Clovis, Rocket Mortgage, AMC, and GME. AMC never made sense to me because its short interest wasn't even close to that of GME. GME had 120%, short interest. It was like more shorts than shares available. That's why I bought it. And obviously it's come down from there, but it's still very high. So I look at who's winning here. Anyone who bought the stock before January is up a fuck ton, right? And anyone short the stock before January is getting their ass handed to them. And then there's even multiple price points since then where if you're short the stock, you're getting your ass kicked. So if I'm keeping score, the shorts are losing right now. That's what that chart shows me, is that this stock should not be in the triple digits. The fact that it is implies that this is not over yet. And then, so what are these catalysts? We see, I was actually going to write the story, I was too busy. GameStop is being promoted out of the Russell 2000 index into the Russell 1000 because of the capital appreciation. There's rules. If your stock was over a certain market cap on a certain day, you get added to a different index. So GameStop is being added, AMC is not, because of just timing issues. If AMC was being valued on current day valuations, it would also be getting added to the Russell 1000. So there's something really weird going on here, where institutions who own the Russell 2000 stocks are selling GameStop, and institutions who own the Russell 1000 are going to have to buy GameStop. So it's like this weird push-pull going on right now, and I think we're seeing that in the stock. But yeah, the reason I'm focused on GameStop and why I think this started with GameStop was that it was the mother of all short squeeze. And it still is the mother of all short squeezes. Yeah, we've seen others, but AMC, I really think that AMC's run was driven more by the optical cheapness of the stock than anything. And like, if I owned one of these mega companies right now, like Nvidia, like let's look at Nvidia. Nvidia's $754 stock, optically expensive, right? I would split the stock 100 to 1 and watch all these idiots buy it because it's optically cheap now. Oh, look, it's $7 stock. I'm gonna buy it. Nvidia's never been cheaper. Yeah. No, there's just 100 times the amount of shares outstanding. It's like you cut a pie in 100 pieces. You don't have more pie. Same pie. Yeah. But optically, that piece of pie is way cheaper now. It's a freaking 100th of a pie, but man,
it's cheaper.
Boy, can I afford that 100th of a pie now? Right. Doesn't make it any more valuable. And I think that is what really troubles me, is that so many people in the market right now don't understand that simple concept or don't care because they can't afford those shares, so who cares? But to me, someone who's invested based on fundamentals for a long time, boy, would I rather own Nvidia than most of these meme stocks. Nvidia's killing it. Just hit an all-time high today.
So how are the memes driving this?
That's interesting. I don't think that the conversation would be continuing without the memes. This is like without the memes, it's like the serotonin these people need to keep going. And it's
almost like propaganda in a lot of ways.
It is. It is propaganda, and it's brainwashing, and it's a lot of things. I've actually talked to a lot of these meme accounts. Like I've met them in Twitter Spaces and DMs and stuff. A lot of these meme accounts are some of the smartest people I've ever met. Like really intelligent people and eloquent. And I was surprised by that. But I shouldn't be because their memes are funny and all that. So there's this there is like a group of people in this movement who are smart and understand what's happening, and they're able to make content around it, right? And then there's their followers who just reshare. We've talked about this for decades, David. It's really easy to just hit retweet without understanding a damn thing about what you're sharing. And that's what's going on here. Funny meme, that Anakin and Padme meme, like stuff like that. We're going to see those get repurposed into GME and posted. I will say that these are very creative people, and they make really funny things. and they have where the memes really play in. They have found, Blake, to your point, there's no leader, but there's definitely a villain. The villain is Citadel, Ken Griffin, the hedge funds that are short GameStop. So it was Melvin Capital at that point. Melvin Capital's CEO, Gabe Plotkin, was getting death threats and stuff.
Yeah.
So they were creating memes attacking those people.
Yeah, and hedge funds have leadership. They have planning. They know what they're doing. They execute on that. And that gives them a huge leg up.
Yeah, and then
and also the shit tons of money they have as well.
But add to that they have connections with CNBC or mainstream media outlets that John Jaboufer on Reddit doesn't.
Mm-hmm.
But boy, John Jaboufer on Reddit can reach 10 million people with a dank meme.
Mm-hmm.
No one on CNBC would kill for those numbers.
Right.
And that's why they shit on us so much. Like, it's weird. I straddle this situation, right? Because I don't 100% feel like I'm part of the Reddit community. I never have.
Mm-hmm.
I have never felt like I was part of Wall Street. When I was an investment advisor, I was doing my own thing out of Texas with my best friend. We provided free advice up to the first $10,000 you put with us under management. We were a different company, and we failed, right? That was 2012, so I haven't been doing that for almost 10 years. So I definitely have never felt part of Wall Street, but I knew those guys. I know how they think, and I've been friends with people who manage hedge funds. So I understood, like, that's their attitude. And I got to see this attitude over here in the meme world. It's like I exist in between these two worlds. Like, I don't feel like I'm part of either. But I do worry when I see people that are like, for instance, the shareholder meeting. Good example of this. Last week was the GameStop shareholder meeting. Some fake news broke, and like I spent about an hour vetting it because I was just like, that seems like bullshit. Someone started spreading this rumor from the shareholder meeting that there were more shares voted at the shareholder meeting than the float, which is impossible.
Mm-hmm.
And it just turned out that someone misunderstood what the executor of the vote, or whatever his name is, what he said. Because that's not possible. Short sellers can't vote. You don't actually own anything if you're short. The person who lent you those shares is the one who has the voting rights.
Right.
So when I saw that, and I started telling people in the community, like, hey, this isn't true, their replies to me were, I don't care, it's going to make the stock go up. And I was like, oh boy, this is not who I want to fight alongside.
Right.
And that's why I actually was like, man, maybe I should sell the stock. I didn't, because like I said, my thesis is that the short interest is still high and the stock is still very high for some reason, so let's stay long. But yeah, you had people straight up tell me, don't tell me not to share fake news. I'm trying to make the stock go up. Mm-hmm. And I'm like, you're no better than these hedge funds that go on CNBC and talk their book trying to make the stock go down.
Right.
You know what I mean? Like, they're forgetting the core tenets of this movement, probably because they're fucking idiots, but also because, like, they're greedy. And it's troubling. Like, I don't want to be on that. I don't want to be in a trade with these people. And that's an issue. And that's like, it goes going back to the memes. Memes, you know this, like, memes travel faster on the internet than actual real information. You know? So if you can convey something that does have a little bit of real information in it, like Ken Griffin's a piece of shit, or Citadel's fucking horrible, or fuck Robin Hood, but it's a dank meme with like a kitty cat playing bongos and a rocket going to the moon.
Yeah.
I'm going to retweet that. I'm going to watch it. I'll probably reshare it, all that stuff. So I think that was the core where it was good. You know, that there is this like, an element of virtue to the movement, but it's being perverted by people. And I think we're fucking 6 months into this.
Yeah. Wow.
6 months. No short squeeze should last this long. Short squeezes are like here and gone, you know, and people So people have asked me, like, how does this end? I'm like, someone on Wall Street's going to kill themselves. Like, that's usually how a short squeeze ends. Tesla didn't end that way, but companies go under. But yeah, it's so bizarre. But I definitely find myself more interested in Tesla and GME than I'm in Tesla.
Mhm.
Even though Tesla makes like an actual cool product and they're growing and they have factory and stuff, like nothing about GameStop, the company, makes me want to own it.
No.
And now I'm seeing people who have owned this stock for so long that they're talking themselves into believing in the company. And I'm like, you guys are so fucked.
Yeah.
You can't fall in love with the stock. It's a piece of fucking paper.
Mm-hmm.
Like, don't fall in love with the stock. And I fear that with AMC and GME, there's like a sense of tribalism that I'm never going to sell. And I'm like, no. That's not how this works. If you never sell, you're going to get fucked.
Yeah.
Like, letting you know that right now, folks. If you're going to hold this stock forever, you're fucked. The stock is not going to be here 10 years from now.
Mhm.
No fucking way.
Yeah.
I would be shocked. Like, I don't know what kind of universe we live in where GameStop becomes like some massive corporation.
Yeah.
That would be something else.
Plus, I mean, you shouldn't just put all your eggs in one basket. Like, I'm not.
Oh, holy shit!
I'm not an
That's the other
investor at
thing.
all, right? But
Yeah.
I know enough that like you should diversify your portfolio, right?
You're dead right. A lot of people, I see it every day actually on Twitter and on Reddit. They liquidate their entire portfolio and they go all in on GameStop or all in on AMC, and then AMC drops 30%. And they're like, I lost 30% of my money. I'm exiting, and then you don't do that. Just for full disclosure, I put 5% of my portfolio in GameStop. So if it goes to zero, I'm fine. Like, I would be pissed. I don't want to lose money. I hate losing money.
Right.
I hate it. But 5% of the portfolio is not going to kill my company.
Right.
There's people out there who have put every dollar they have into this. Into GameStop!
Yeah.
Right? Do they even
Like-
know what GameStop does?
Like, let's just I'm ending the stock
All right, it's just
chart
us
screen.
again. It's just the
Yeah.
three of us now. There's nobody else here.
To put your whole life savings in GameStop?
Yeah. No, I'm with you. I get what you're saying. It's not
Yeah.
a great idea. It's
Like-
definitely not a great idea.
And to think that that's going to be your get-rich-quick scheme.
Yeah, like the irony of GameStop is
Man.
their principal business is you give them something valuable and they give you very little
Yeah,
in return.
Yeah.
Like that's what they do.
Yeah.
You know?
Oh
yeah.
man.
They're like, here's Madden. They're like, here's 50 cents of store credit.
Yep.
You know what I mean? Costs you $60, you get 50 cents of.
And they'll sell it for 35 or 50.
Yeah.
Yeah.
It's
They do.
And TJ, you put it better than I could. Consolidating your entire position on one risky bet seems incredibly desperate, and that's it. It's a sense of desperation in a lot of these longs, and it's like it's exhausting every day.
man.
This is going to be the day that this happens. You got to hold it for this day, and they keep moving the goalposts.
It's those
Like,
same
it's-
motherfuckers that were out there buying Beanie Babies, or like
it's different.
ripping off Pokemon card shit. You think
It's
those
different,
people aren't
man.
trying to get in on that?
I think those people, scalpers, actually make money. I think a lot of the people in these trades are not making money. They're like day trading them poorly. The best way to be in this is to buy it and forget it, and then come back when you see it on CNBC and GameStop's at $900 a share or something, then you dump it. But like, they're convincing themselves that they're making good investments, and there's like, it's an echo chamber. It's this echo chamber of uninformed people who are all telling each other, yeah, great job, risk your entire life. You know, like,
Yeah.
don't do that. Like, there's a better way to go about this. Like, you can take calculated risk. I'm long this stupid stock, but I managed my risk. You know, that's all I'm saying. There's a way to do this where you're not betting the entire the farm. You know, and I worry that, and you know, going back to that S&P chart I showed, that everyone has this level of confidence this late into a bull run, they're just about to pull the rug out from everyone. And anyone long is going to fall flat on their face. It doesn't matter what stock you're long. Apple, good companies, Facebook, whatever. At some point, the business cycle changes. And the reason that we got here to begin with is the Federal Reserve has been printing money for years, right? That was their response to the pandemic, was to print more money, issue debt. They are actually doing $750 billion of reverse repos right now, every day, because the federal funds rate would spike if they didn't. So the Federal Reserve has become the lender of last resort to our economy. Printed fiat currency being lent to our own government is the only reason we're here to begin with. And that's not going to continue forever. So when that ends, this speculation is going to come to an end on both sides. The shorts are going to have to cover because their margin interest goes up, and the longs are going to have to cover if they're using margin. Now, if you're not using margin, you're fine. You can just stay long. But volatility premiums are going to go up, all sorts of things. Like, I fear that we've been lulled into this false sense of security by the Federal Reserve. And I've been studying the market. I've studied 100 years of the stock market from the Great Depression to present day. There has never been a time where the Federal Reserve has not fucked up. The Fed always fucks up. They always overinflate. They're too easy with monetary policy. They cause a bubble, which is clearly happening. Like, you can look at different asset prices. You can look at real estate going to the moon right now. Lumber prices went to the moon. Copper went up. Look at what happened with Bitcoin and cryptocurrencies earlier this year. That's a vote against paper currency too. So like, I fear that the Federal Reserve is going to let inflation get out of hand. We're already seeing it with wages. They're not paying people enough, so people aren't going back to work, right? That's like a worker revolt that's going on. More power to the workers. But that's going to hit the companies one of two ways. They're either not going to be able to fulfill orders or whatever business they're doing, or they're going to have to pay people more and their margins are going to go down. By the way, all input costs are rising. So margins are going to be under pressure. I think that's, no one's talking about these things. No one's talking about lumber and how it is like prohibitively expensive right now to build a house, right? And that's why my neighbor's house is going for $460,000, which is insane to me. In Canton, around your house, look how many things are being built.
I know, it's absurd.
This town, who the fuck wants to live here? Why are all these houses being built? Because there's money. There's a greater fool, right? Have you heard of the greater fool theory? The greater fool theory is that there's always someone dumber than you that will buy the thing that you're trying to flip. And I think we're witnessing that right now. I think that some people buying GameStop might be the greater fool. Some people buying AMC might be the greater fool. I'm not saying, if you don't know why you're buying these things and you're just doing it because YOLO, that's troubling.
Yeah.
And I know that a lot of people are doing it just because YOLO. Or they're doing it because Keith said something. Keith's basis is way lower than yours. This is in the 50s or something. And before that, it was even lower. He actually raised his basis. So that's what's weird here. Is that, and I go back to GameStop because everyone who bought it before January is up. Anyone who was short it is down. And it's as simple as that. As long as this continues, the longer this continues, the better the case for the mother of all short squeezes becomes. I'm pissed that they didn't let it happen in January because this would have already been done with. I fear that it may have caused a massive collapse in the stock market if they let it continue because there was all this counterparty risk. But that's what I was cheering for. I wanted that. I was like, yeah, let's take down the system with GameStop. That seems about right. But clearly they're not going to let us do that. Right. That's another thing that troubles me about this position. We know how they treated us in January, right? We saw what the Citadel has a playbook, Robinhood has a playbook, E-Trade, all these companies have playbooks for how to handle this. Nothing's changed. Not a single rule has changed. Same stock market. Why do we think they're not going to fuck us again? You know?
Yeah.
And a bigger question to you jaboofers watching here. Why the fuck are you using Robinhood, you fucking morons?
I mean,
It's the
Are
same principle
people-
of the meme. Robinhood became synonymous with this rise in GME, and so people want to kind of jump on what they view as a gravy train, but they don't see that it's going to go off the rails.
And then 2 weeks ago, Robinhood could not execute Dogecoin trade. And everyone was like, I'm mad. I'm like, I'm mad at your dumb ass for still being in Robinhood.
Mm-hmm.
I'm mad at your dumb ass for still using Robinhood after they fucked GME shareholders and AMC shareholders in January. Like, I get it if you're stuck in there and you have a position and like you don't want to transfer or whatever, fine. People who put more money into Robinhood since then are the highest level of jaboofer.
Yeah.
That's jaboofer prime.
Would you
Jaboofer
recommend
Prime. It's the
instead
worst
of
transformer ever.
For real.
instead of going with an app like E-Trade or Robinhood, if you wanna invest
Mhm.
smartly, is it better to talk to a stockbroker, someone who knows what they're doing? Is this something that someone can do on their own unless they're willing to devote all the time into researching and monitoring the stock if this isn't their job?
Okay, this is a very good question, David. I'm gonna give an accountant answer.
Yeah.
It depends. It depends on a couple things. I believe personally that people should take control of their finances.
Mm-hmm.
I don't think a stockbroker has your best interest in mind. They're salesmen. The way a stockbroker works, like let's say you work at Fidelity or something, they come in every morning, they're like, hey, we got 2 million shares of Target. Go sell them.
Mm-hmm.
So then they call their clients and say, hey, Target's really, really good. You should buy some Target because they have to sell it.
Yeah.
So I wouldn't recommend a broker for that. There are other professionals in the industry called investment advisor representatives. Those people are not salespeople. They charge you based on percent of assets under management. And that's it. It's a fee based on how much you put with them.
Mm-hmm.
They don't get paid commissions. They are not in any, there's no incentive for them to sell you anything other than their own service, right? So if you are not certain about making your own investment decisions, yes, an investment advisor representative is not a bad way to go. But I really do believe that people can take control of their finances. And I don't think that these things are that hard to understand. Invest in things you understand, first of all.
Mm-hmm.
So I invest in video games. My largest holding is Nintendo. I understand that company.
Right.
Do your homework. So it's the 21st century. We have all the world's information in our pocket. And we're mainly looking at porn and pictures of animals. But you have it. An encyclopedia of all the world's investment knowledge is right there.
Mm-hmm.
You can teach it yourself. YouTube has great tutorials. There's people out there who are willing to teach you trading techniques. My trading coach, who I don't really actively use anymore, but he taught me a lot of my trading techniques. Rob Smith, he has a channel on YouTube where he posts stuff for free. So there's a lot of free content out there where you can teach yourself. And a concept that I wish more people would do when they're a novice trader is called paper trading. Instead of actually investing, just pretend that you are. It's like fantasy football,
Mm-hmm.
right? Start being like, okay, I bought this stock. I bought GameStop for $10. How did it do? Yeah, and granted, if it has the mother of all short squeeze, you're going to be pissed you didn't actually put real money in it. But if it tanks 90%, you're going to be happy you didn't put real money.
Mm-hmm.
Paper trading is a great way to get started, and it doesn't involve having to have a bunch of money. You don't have to have any money, right? You can do it with $0, right? And then you don't run the risk of losing money on your first few investments. Because a lot of people, I've seen a lot of people who think they can be day traders and they blow out their entire position in like a month because they start trading options or, options that can expire every week now. There's a weekly expiration, which makes things more volatile. Yeah, and if you're trading options in these meme stocks, their premiums are insanely high. Like right now, I think the volatility index, which represents risk on the S&P 500, is 17.75. GME options, triple digits, like 150 implied volatility. It's almost 10 times that of the S&P 500. So you're paying this massive premium for options, and if you don't understand how options are even priced, you shouldn't be doing that. But I see people doing it every day, and it bothers me. I think Robinhood is at fault here because they're like, just, yeah, sure, you can trade options. Sure, you can trade. They're just letting everyone trade whatever they want. And I get that. Like, their core mission of democratizing shareholders or the ability to be a shareholder is a good idea. I'm not against that idea. It's that they don't care if you lose, like any casino. They're like, sure, everyone should be able to gamble because we want your money too. It doesn't matter. I think that's a troubling thing. I wish people were trying to learn more about this as they get deeper into this movement, but they're not. They're just entrenched in this fact that this is what's happening, this is where we're going, and that's how it's going to be. And I've said this a bunch. Cognitive dissonance is the real bubble right now. Everyone's sniffing their own farts. They think they smell delicious, and they're wrong.
What can
Farts
you do
are
about
stinky.
What can you do about that, though, right?
You can fucking get out of GameStop. That's what I should do. But like, I'm in it because my thesis hasn't played out yet, and that's
say that you're not out because of the thesis. So you're sticking to your investment principle.
Yeah, and that's what Keith is doing too. He hasn't outright said it because he hasn't posted an update to his portfolio to Wall Street Bets. I don't know if he's allowed to or what, but I'm pretty sure based on his tweets, it's implied that he's still long the stock. And that guy has 200,000 shares. So sometime last week he was worth $60 million,
right,
out of a $90,000 original investment, which is just the stuff of dreams. That's the American dream that everyone is chasing now. But Keith Gill got it because he had the balls in 2018 or 2019 or 2020 to do it. Not like, for me, this is not the first short squeeze I've participated in. I mentioned Tesla being one, Teladoc being one, the banks being one.
Some of this seems analogous to the gold rush.
Totally. It is.
Like, I'm thinking about it like, shit, this has happened before, just not with stocks.
Tulips.
With gold. Yeah, tulips.
It's happened with tulips.
Yeah.
It's happened with Bitcoin. It's happened with GameStop. It's happened with AMC. It happened with Tesla. It happened with Volkswagen. Like, Volkswagen was a massive short squeeze.
Yeah.
But yeah, it's happened in U.S. Steel. Like, it's happened before. What stocks go up? Yes, they do go up. Yeah, I don't know. This seems like it's just been an hour of me rambling, but
that's good information.
Yeah, I think that I think people are not. Yep. Gotcha, Mad Shroomer. Yeah, I think people are not really assessing risk properly right now, and I think that this meme revolution is indicative of a bigger problem. It's not. I think Wall Street and the mainstream media on Wall Street really like to blame retail traders for what's happening. There's hedge funds that are trading. Like, they're not any, because Wall Street's ruthless. So if they sense blood in the water, oh, my competition short GME and I can fuck them over by getting long GME, that's what's going on. Yeah. So I think that, I've said this a lot, but I'll say it again. If you're trading GME or you're investing in GME right now, you're in the deepest end of the pool with the fattest giant sharks you've ever seen, and you could get killed. So, if you're cool with that, go with it. And if you're a young person and your life savings is only $2,000 and you bought 10 shares of GME or something, more power to you. You're going to make more money. You'll be able to live with that. I'm talking about people who have like savings and are putting it in this.
Right.
Or people who are like grossly in debt, that could actually pay off their debt instead of buying this. Like, you're not doing it right. And I worry that people are going to get carried out left and right here. And yeah, I do think that I'm pretty sure not a single one of them is paying attention to Federal Reserve monetary policy or the reverse repo. I actually know that some of them are paying attention to the reverse repo market, but like I said, that's what's so weird about this movement. There's some really intelligent people who are at the core of this. Retail investors who they're taking their own risk, they're managing their risk, they know what they're doing. And there's a lot of people who are just following. There's just a lot of followers. And to Blake's point, there is no central guy. There's no one saying, buy today, sell tomorrow, this is the day. There's just a lot of misinformed people who keep coming up with mythical days, like, this is the day. This is the day it's going to happen. This is the day it's going to happen. This is the day it's going to happen. You'll find with a lot of our coverage on Shacknews, it's factual. Like, we don't report on this might happen in GME. We tell you when it happens, why it happens. That's it. We're never going to, I'm making it a point to only be factual with these reports. Not a single bit of advice, not a single bit of opinion. Just what is happening. What are the facts? And what I hope comes from this, I hope we get better short selling disclosure. I would appreciate that. I hope we get better clearing, because right now it takes 3 days for money to clear in brokerage accounts. That's not the case for Bitcoin or cryptocurrencies. Something that Vlad Tenev from Robinhood has mentioned, because the SEC is investigating Robinhood right now. So I hope good comes from this. I'm not optimistic, because this is America, and it's super corrupt. This is late stage capitalism as fuck. This whole thing, it just reeks of an empire that is crumbling, and just people that are just, it's a mad dash for money right now. Dogecoin one day, AMC another, GME another. I made millions of dollars holding Apple for 20 years. 20. It took 20 years. I love that Keith is a millionaire. I love that Keith made it. I love his story. His story is very uncommon. And everyone thinks they can be Keith.
Right.
You can't be Keith. Because the time to be Keith was last year. Not now.
It's probably, the odds are probably better to win the lottery, right? Than to end up like that dude.
Yeah.
I mean,
probably.
Yeah, it's such a rare thing. The lottery, someone wins every 2 or 3 times a week, right? Somebody investing in a stock that blows up randomly and makes a ridiculous amount of money off of that doesn't happen every day.
No, and even to that point of the long-term S&P chart, the S&P didn't go from 666 to 4,200 in a day. It took 12 years. And I don't think people are patient enough for this market. This is a market where computers are trading stocks back and forth every few milliseconds, and people are day trading stocks that they have no business day trading. And a lot of people don't even know the tax consequences of what they're doing, especially in cryptocurrency. I think it's hilarious how little people understand about cryptocurrency who are in it now. So it's this whole thing, right? Like, crypto fell from Bitcoin fell from 60K to 30K, right? That's 50% of your money gone. And I worry that more of that is going to occur, because the Federal Reserve is in a very dangerous place, because rates are already low. What do you do if we are going to, I don't think we're entering a recession anytime soon. So it makes this monetary policy even weirder, that we actually had the best GDP number in 15 years or something. We grew at 5% last quarter. Something crazy, really fast growth. We're having some of the highest inflation numbers we've seen in 20 years. they're going to be late. The economy's going to overheat. It's like right now, God, everyone's getting tickets. They're going places, concerts, hotels. Like America's back, baby, right?
Mm-hmm.
We beat COVID, right? Like we're doing our thing.
Mm-hmm.
So that's bullish, right? Just logically.
Mm-hmm.
So I feel like there's this time where everything's gonna be great. Everything looks great.
Yeah.
And then we're gonna be like, well, now what?
Mm-hmm.
Because our accommodative monetary policy is coming at a time where the economy is peaking.
Mm-hmm.
That's never the case.
Right.
Usually, you have very high rates when the economy is on fire. Right now, we have the lowest rates in history.
Mm-hmm.
So where the fuck are we gonna go from here?
Yeah.
Yeah. And then I didn't want to get into it, but China and Russia are gonna fuck over the treasury market big time. They already are. And that goes back to the Fed being the lender of last resort. If you want an idea of what the future 20 years look like, go look at Japan. Japan is a good example of what could happen to us, because they've monetized their debt for 30 years now. It's not working because America's monetizing our debt, and we haven't done it as much. So that's making their currency appreciate while they're trying to inflate their way out of their problems.
Mm-hmm.
They're fucked. I think the Japanese central bank should print money and buy Dogecoin or something. Like, quit buying your own debt.
That would be amazing if that happened.
The Central Bank of
That would be
Japan.
so amazing.
Bank of Japan's like, we're done buying Japanese assets. We're just gonna go all in on Doge.
Yeah.
Like, I can actually see that work for them. But yeah, like, it's called a Keynesian endpoint. At the end of this excessive monetary policy, there's like a day of reckoning, and I don't think this country's prepared for it at all. So it's going to be this like happier days are here again for the rest of the year, right? I'm early. I know for a fact I'm early with this warning, right? Because everyone's like, you're a dumbass. This economy's never been better in my life. Right?
Mm-hmm.
Look at lumber prices.
Yeah.
People like point to housing and point to lumber prices as evidence that I'm wrong. I'm like, oh, okay.
Yeah.
Yeah, because American housing never caused a bubble. Yep. Never.
Yep.
We've never had we've never had a real estate bubble twice in our lifetime.
Mm-hmm.
And also, like, treasury yields being the lowest they've ever been in our lifetime, that's fucking weird. Like, where do we go from here? It's like last year, the 30-year treasury was below 1% yield. That's a horrible return for a 30-year asset, you know, when you could buy Apple or Nintendo and get a better yield at the time. So yeah, I worry that the Federal Reserve is going to fuck this up. So that would be my advice. Thank you, Tense, for the sub. We appreciate you, buddy.
Well,
yeah.
On that cheerful note,
yeah. I wasn't. This was not a panel here. I'm not here to fucking cheer you up, man.
Oh no.
This is not like. I know my cute dog's here and everything, but like, there's a saying on Wall Street: if you want a friend, get a dog. So I did.
Yeah.
But yeah, no, this is. I'm not saying we're all doomed. I'm just saying, fucking manage your risk and like admit that.
Invest wisely.
Just look at the goddamn chart of the S&P 500 for a second and tell me that you think we're closer. Just ask yourself: are we closer to the top or the bottom?
Right.
And it seems pretty clear we're closer to a top. And it doesn't make things any better that you have SPACs and NFTs and a lot of these things that are coming up that are very, very speculative.
Mm-hmm.
You know, you have speculative bubbles popping off all over the place. So it's just, I don't know. I'm tired. I'm tired of this shit, and I don't like being in a trade with a bunch of morons, but I am. Right. It's that meme from Lord of the Rings where he's like, I never thought I'd be fighting alongside a blank.
Mm-hmm.
And I'm like, I never thought I'd be fighting alongside Reddit.
Yeah.
But here I am.
Mm-hmm.
And yeah, there's no solidarity. That's the main issue. Is like, I have never seen, and look, I own Shacknews Chatty. I've never seen a hive of scum and villainy worse than Wall Street Bets.
Mm-hmm.
I've been in their Discord. The shit they say is just filthy.
Yeah.
Like nasty and horrible. And like to each other, about their wives. My your wife's boyfriend is like a meme over there. It's like, man, your wife's boyfriend's gonna be totally pissed at you for buying more GameStop. They call each other apes. They call each other the R word. They say horrible things, and it's like funny to them, and it proliferates, and it's just a very toxic culture. And I don't like seeing that element of this.
Right.
I think it's very troubling, and in the long run, it'll end up. In the long run, it's why this is not going to last, because they're just going to piss each other off, and then they'll fracture, which is what we saw with Occupy Wall Street. So there you go, folks. In conclusion, buy Nintendo stock when it hits around 55 or 65. There you go. There's your stock tip. That's not investment advice.
All right. Well, awesome. Thank you so much for coming on and speaking wisdom. You definitely have an insight into the stock market that I think is really unique, especially in the games industry. And it's been interesting to watch this whole GME thing develop.
I find it charming when our competitors try to report on GME because they do such a bad job.
Yeah, I mean, they're games journalists, bless their hearts. That's what they know. That's what they know. It's not, it's not their field of interest. And I think that's what's been really interesting about Shacknews' coverage is we have insight.
But even the financial publications in our industry are not doing a good job covering this.
Well, you're a journalist. You go to your sources, consult them.
Yeah,
that's why Shacknews is becoming more of a source for news like this.
Yeah, people want, man,
Lola
Coin and Shack Stonk. Yeah.
Wow.
I more to come on that front. Let's just say that.
All right. Well, until then, Asif, thank you for stopping by today. David L. Craddock, long reads editor, Shacknews.com. I, of course, am Blake Morris, co-editor-in-chief at Shacknews.com. This is the end of today's E5 coverage. So thank you all for sticking around. We had some amazing stuff on today's stream, dudes.
Brenda Romero was a highlight for me.
Oh my goodness. And she was giving shout outs and love to Shacknews left and right. Oh,
it was great.
It was so nice. As well as her lovely husband, John Romero, was also giving out some Shacknews love today. Dave Austri came by from New Blood, and that was a really interesting conversation. The approach that they take to game development is one of a kind.
Yeah.
So it was great.
I've been a fan of Dave's for a while. It's just great to. It was great to have him be part of E5. I appreciate it. I appreciate everyone for taking the time out and being part of this.
Yeah.
Supporting us. I feel like we are bringing the content that we would have brought to people from the show floor of E3.
We're doing our best, and in some ways we're able to bring them even more content because the show floor closes at a certain time and we all go get tacos.
Yep.
But now it's just me in my apartment pushing around videos and stuff like that and making the internets happen. So that gives us a lot more flexibility. And yeah, we got one more day to go of E5 goodness, but then we continue with the summer of doing our jobs. So the content doesn't end here, folks. So make sure that you're going to shacknews.com, checking out all the other coverage we've had. If you missed a panel today, if you missed an interview, if you missed a game demo, we have been putting them all up at shacknews.com. You can also find them on our YouTube channels if you want to give us subs there at Shack News Games or Gamer Hub Videos. Those are great places to go if you want to check out more of our video content and also give us some of that sweet, sweet YouTube ad money. But you know what? The fun doesn't stop there, people. You may want to head over to Twitter and give us a follow because you may or may not have heard this, but we're totally verified now. Like 100%. Our Twitter has been vaxxed and is completely safe to follow. So please give us that follow if you want. We're also Shack Media or Shack News Media on Instagram. You can check out all of our awesome Thirst Trap picks there if you want, or you can follow or like us on Facebook as well if you feel so inclined. It's just Shack News. So it's really that simple. And of course, while you're here on our Twitch channel, if you want to catch tomorrow's stream, probably want to give us a follow. Definitely want to give us a follow. Maybe you want to give us $5 for that sweet monthly sub, just like our homie Tense did earlier. You could do that as well. Or maybe you have Amazon Prime Gaming and you don't know what to do with that free sub you get every month. You're looking at what to do with that sub now. I think you know what's up. Either way, thank you so much for tuning in today. We'll be back tomorrow. Tomorrow is another incredible day. Let's see. We're going to be starting off with our startup show at 9 a.m. Pacific, noon Eastern. Then we've got Rogue Legacy 2 interview, Monster Harvest, Blooming Casino, and Homo Ludens. We got a panel on the stimulus games, which will be happening again this Saturday at 1 p.m. Pacific, 4 p.m. Eastern, so you'll also want to tune into that. We have an interview that also you conducted with Joe Torado about Latinx and gaming, right?
Yep.
All right. And then we're going to be coming at you with 3, not 1, not 2, but 3, count of 3 live stream shows in a row. We're going to be starting off at 1 p.m. Pacific, 4 p.m. Eastern with a State of VR panel. Then we're going to be doing an extra special dump, which is basically our new show, but we're going to kind of just, it's been a long week, so we're going to talk about everything that's happened at E3, at E5, and just sort of, have a good time, hang out, wind things down. But after that, oh my God, holy shit. Asif, you have Hasbro's Unicron, and you're going to be unboxing it live and direct.
I know.
This is going to be incredible. Here? I guess there.
I can't get the. I don't know.
You got another table that you could bring in, right, or something?
I have a table. I'm going to put a table back here, and we're just going to unbox it here with this camera, I think.
Okay,
Logistics, cool. TBD.
Yeah.
I mean, we're just going to have fun. It's going to be a fun time. I'll probably nerd out about Transformers a lot because I love Transformers. I'm really excited to see this. So until then, thank you all once again for tuning in.
Thanks,
we'll be
Lola.
back tomorrow. Thanks for watching. Take care, everyone. Have a good night.